Well, for homeowners, they're always looking and thinking about how can I get my mortgage paid off? And question came up that we heard recently is what's the average age that someone gets their mortgage paid off by? Well, maybe the question you should be asking is why are you in a rush to pay off your mortgage? Today we'll talk about why it might be a better approach to try to make those payments month to month and it could be more for financial success over the long term. We'll talk about all that with Bill Litton coming up next. Hello and welcome in. This is the Smart Mortgage Show. I'm Ben George with Bill Linton over at Cross Country Mortgage. If you have any questions, check us out, smartmortgageshow.com. Also, take advantage of Bill's 15-minute free mortgage loan consultation. Sit down with you and talk through any questions you might have, including this one, Bill, which I wanted to discuss a little bit with you today. As I heard someone say recently, or just ask, came up in conversation, what's the average age that someone pays off their mortgage? Which I think is interesting because I know there's a lot of people that have that goal of getting that mortgage paid off, right?
Yeah, I think that some people feel like it's, and there's no question that in some ways it is an accomplishment, or going from a 30-year loan to a 15-year loan is like a rite of passage. Like, I've gotten to that, level that I've heard about, the 15-year loan. But paying your house off certainly is not a bad thing.
Right.
But depending on your financial plan, it might not be the best thing.
So I want to dive into that with you a little bit. And I think, to answer that question, I'm sure the average age is all over the place. And I'm sure, everybody likes to kind of have that benchmark as they're working towards financial goals, right? I think you hear the question all the time, well, how much should I have saved at this age? Kind of similar questions. When should I have my mortgage paid off? So I think it's interesting to have that conversation. But again, I think the better question is why be in that rush, right? I know it is a goal, but you shouldn't be comparing yourself to other people in any aspect of your financial life, right? Because then you only feel like you're coming up short a lot of times when you're comparing situations, and that's not always the case.
Yeah, and Ben, the old saying, right? Comparison is the thief of joy.
Yeah, I love that. Yeah.
And when we compare on this very surface level, we have no idea what those other people's other variables in their lives look like. So what we believe is you should absolutely have a financial advisor and a mortgage advisor, and they should be communicating to understand what your goals are. Because if your goal is absolutely to pay off your house, well, we want to understand what's driving that goal. And if we can understand what's driving that goal, at the end of the day, we might still say, great, you want to pay it off, but that is not a blanket statement or a general goal for everybody, right? Because let's look at it like this. Let's say you're in your forever home and you've got a 3% interest rate and your financial advisor feels relatively confident that they can earn you 8% in the market. Then why are we trading 8% money for 3% money? Why are we in a rush to pay that off? Because if you extrapolate out using a compounding interest calculator, where that 8% money is going to be by the time you'd pay off your loan, you'll have far more gains in that account than you would a reduction in debt on your mortgage. So if you kind of played that out, you could certainly, earn an extra X amount, pay off the mortgage, and still be left with a surplus if you were investing smartly with a good financial advisor.
Yeah, I think that's the main goal, right? Is how to get the most out of your money, and it might not be paying off those mortgage fast enough. And I think a lot of people, I guess the goal for a lot of people is to have it paid off by retirement, though, right? I mean, I think and not that carrying a mortgage debt into retirement's a bad thing necessarily. I think it's more a peace of mind for a lot of people, right? It's just having that debt off your books completely.
Yeah, and I don't think that again I think that's, look, if we're talking about where to put money, your house is an investment, and reducing the amount of interest you pay on that investment is smart. It's not like you're talking about taking the money to Las Vegas, because that certainly would not be smart. So, paying down your house is a great place to put it. But I think that having a plan that says, because I watch some people that they're so focused on paying off their house that now their investment portfolio is not growing at a rate that's going to give them the return in retirement that they need. So now they've got this house there, right? And it's paid off, but they don't have enough money to pay their other bills. Now they have less bills because the mortgage is not in that liability calculation. but they still don't have enough cash flow. So we need a balanced approach, right? We need to be investing, maxing your 401k, getting any match from your employer. It's free money. That's the first place we want to be before we decide to pay down mortgage debt at all. And then once we've fulfilled that requirement, then it's okay. IRAs, then, are we investing in mutual funds and other index funds? And at the same time, a balanced, diversified approach to paying down the mortgage quicker. But that doesn't mean locking into a 15-year loan or a 10-year loan or even a 20-year loan. I love the 30-year loan because you're the boss. You can pay it down when it fits in your budget. And if you run into an issue, you can always go back to that worst case or that rather best case, lowest payment that comes with the 30-year loan, just the required amount.
Yeah. That's a good option to have that flexibility, right? And that's, again, these are kind of the conversations you have with people though, too, because I know you mentioned kind of the start of this conversation about having a mortgage advisor. You guys kind of play that role, right? When you're working with someone that's sitting down, thinking about what their goals are and talking about their mortgage options, you kind of run through these different scenarios and talk about, the reasons why or why not they'd want to have a 15 or 30 and just talking through what all their options are.
Yeah. And so definitely our process is very consultative, like shooting out just an interest rate to say, this is the rate is, that's one component to a, system of components in a mortgage that there's many, many, many different considerations. So absolutely, we review all of those details to make sure you're in the best position based on your financial plan. And if you don't have a financial plan, we encourage you to, talk with a financial advisor. I have a great financial advisor. She is on top of my goals. She stays on me to make sure I'm in that direction. And she thinks about financing and investing in ways that I'm just not capable of because that's her expertise. You need somebody like that on your side.
Yeah, it's so important to have those people on your side. And I'll finish with one quick story, Bill, because I had a friend who's in his probably early 40s and just paid off his home and made it a point, had saved some decent money and had a nice summer working, extra hours and whatnot. And it was his goal to pay it off quickly. He thought, having that debt free. And I didn't go into a lot of this conversation with him because I obviously don't know his full picture and I don't know his situation. But I even talked about tapping into clearing out a lot of his savings just to get that all paid off. And I was just kind of thinking, hey, maybe that shouldn't be your goal because you just never know with emergency either. What could pop up? Whether expenses could happen that you want to pay for, and you don't want to have to dive back in and pull money out of your equity, do you? If you can avoid it.
Yeah. And we always say, hey, to pay down the loan more quickly or to put more down when you're buying. If the money's there, great, but don't put yourself against the wall. Don't, like you said, put yourself in a situation where now you've liquidated your rainy day fund just to put a little bit more money down there. There is a value in using other people's money. And that's a level of, financial strategy that is, years ago, like my parents, their goal and the conventional wisdom was just get rid of all your debt, get rid of your mortgage, which again might be the right thing for you, but it's not a blanketed kind of one size fits all. And we definitely, to your point, don't want to liquidate important accounts or rainy day funds or high growth accounts to do that.
So to kind of close out the conversation, it is a good goal to have to pay off your mortgage. That's a goal that everyone has, but see the full picture, work with a professional that can help give you advice on, where to maybe position your money to get a better return and get more out of what you're paying towards that mortgage potentially. So it's not a bad goal, not a good ambition to have, but again, have those conversations, figure out if it's the best approach for you long-term, and only you and can answer that. So interesting conversation, Bill. I'm glad you kind of gave us your perspective on this and kind of the things you work through with people across country to help them. Because I know you talk about how important it is all the time about seeing someone's full financial picture. And again, why you work with a trusted mortgage lender that is not just trying to push up the product on you, right, and try to get you into a loan, but making sure that they're putting you in the best position to succeed.
Absolutely. Yeah. We want to look at all of the variables so that we're helping you make the very best financial decisions. This is the largest piece of debt that you're probably ever going to have in your life. Your largest investment is your home. It's a really important component of your financial picture.
Absolutely. Well, thanks for watching. If you have questions for us, drop them in the comments below. We'll check those out. Subscribe, like the video as well. And we'll be back again soon with another one. For Bill Linton over Cross Country Mortgage, I am Ben George. Take care. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.